How you doing, guys? I'm just going through a couple of charts on major economic data, inflation and all that sort of stuff. So this is BLS.gov, which is the Bureau of Labour and Statistics for the US government. This is just one of their interactive charts for US import and export prices, total prices on a 12-month percentage change. So how much it's changed from the previous month. So obviously if it's above the zero line, then prices are going up. If it's below the zero line, prices are going down. Depending on how far above the zero line is, depends on how much it's going up. So you can see here, data GFC for example. You can see going into the GFC, you had a rapid spike where everything jumped up, and at one point all imports in June 2008 were up 21.3%, which is absolutely crazy. And so you can imagine everybody crying inflation at the time, within the space of June, August, so roughly 12 months really. So 12 months from August 2007 to June 2008, things had really gone up. But then look at what happened after that. There's a significant rollover from July here at the peak, all the way back down to July 2009. So within another 12-month period, that's completely changed, and we're down at the bottom 19.1%. And you can see basically since then, I mean, that's a significant decrease in prices. Then had this rebound where it went positive, slowed down a bit, positive again, and it started to dip negative. And then since sort of roughly around 2012, July 2012, things haven't been brilliant. So this is all decreasing. Just is that zero? Yeah, zero, decreasing. I mean, just nip positive. Back down again, big drop off here in 2000, down to 11.4. Briefly turned positive, but not in a major way. Here, 3.6, 4.5. So for the past since 2009, for the past 11 years really, import and export prices have spent most of the time in decline, which isn't particularly. It's not indicative of inflation anyway, I can tell you that much. Anyway, let's have a look at what happened within March. So you can see this brief run up into December, where December, January here went slightly positive before rocketing down due to COVID. By February we're already negative. March, and we bottomed in May. And since then, this big rally of inflation has seen us go up to 0.9. That is it. So all those crying inflation because of quantitative easing and about how prices are going up through the roof, the import and export prices for the US are up 0.9%, which is not, it's not particularly strong, to be honest. Fortunately, this site does have a lot of really good charts on. So there's all sorts of things you can look at here. Consumer Price Index. Let's see what this has to offer. Okay, so this is a 12-month rate of change. I mean, it's not got as much detail as I would like. I'll see if I can find a better chart. 12 months percentage consumer CPI for selected categories. So overall, you can see from 12 months ago, which will be February, so it's just before the crash. May is probably going to be the big one to look at, I guess. That's when everything fell. So since 12 months ago, things are actually up 1.4%. So nothing significant. You can see food's gone up. Food categories are up. Was it 3? Is that 3.8%? For food. So that's a big. It's a big increase, but you've also got to remember there's a lot of supply and demand constraints that have been in place You know, there's a lot. I mean, just think about as soon as you shut everything down and you're getting rid of all these transportation um, and putting all these restrictions in place, there's a lot of supply demand chain issues that arise that are going to significantly affect pricing. So it's reasonable to assume that, you know, food prices are going to go up because foods are essential. You have to eat no matter what. So it's understandable that food would probably go up more than everything else. And then what we can see is that's kind of offset, if you will, by energy, because energy has gone down 3.6%, which, I mean, we all know because the price of oil collapsed. We all know what's been happening there. Shutdown, lack of demand, and that's just driven prices a lot lower. But we can see here, actually, the overall, all items except for food and energy, so everything else, on average, has gone up with the rate of inflation, if you will, 1.4% and 1.4%. So certainly no significant inflationary increases by the looks of this. Let's see if PPI's got anything else. So this is producer prices. So this is PPI for final demand, 1 month percentage change. It is seasonally adjusted. So total here. Let's zoom in a little bit so we can see. So you've got the zero line here. So this is PPI, which is the producer prices. This is what it's costing manufacturers to make stuff, basically. So this is the total. And you can see we have had a big surge up to, is it a little bit over, 1.2, 1.3 here? But it did go negative quite a bit. It's kind of only really offset it. Anything under this line is negative, and you know, if it's going, so like this is negative, but it's accelerating negative, getting worse. And then this is still negative, it's just less negative. And then this is finally positive again. So what we see here is we're positive in quite a big way for producer prices, which leads us to quite a bit of an interesting issue, because whilst we can see that producer prices seem to be, at least in the short term, shooting up since, I mean, when was this? What time? So we're looking at November. So since November, producer prices have been shooting up. If this doesn't go through to consumer prices, then you know we can reasonably expect this to come crashing back down again, and it's probably going to be a bit of a zigzag effect. So it'll probably go significantly negative, and then hopefully go back to some sort of a neutral level. So that's just a quick look at inflation based on what the Bureau of Statistics are saying, basically. There's a few other things on here which is a really useful site. I'm going to go through and I'll see if I can do some more updates for everyone.